Hello, everybody. Welcome to the 12th episode of the Idle Pack Talk Show. Today, we have a good friend of the show who's a financial advisor. We will be talking about insurance and other related things. Everybody, please welcome Castro. Hi, Castro. How are you doing today?
I'm doing fantastic. And you?
I'm good. Smoky weather today
Yes.
from the fires in BC and stuff like that. Anyway, insurance, finances and insurance, they're somehow related, and you are kind of like our expert on that. So you're here to tell us everything that concerns insurance. And this is going to be very interesting.
Yeah, but maybe before we go into the insurance piece, maybe just tell us a little bit about what the role of a financial advisor is. Maybe we start there.
Okay. Thanks, first of all, for creating this great initiative because you're trying to help a lot of people who've been ignored by this industry.
Right.
And a brief answer to your question, the role of a financial advisor is to guide people to make their money work for them instead of working for an institution.
Yeah.
But unfortunately, the industry doesn't work like that in North
Yeah.
America.
The industry kind of teach people to go into debt and, take on these huge unnecessary financial load that a lot of people are struggling with.
Exactly. And the industry is in the business for
Yeah,
making
themselves,
money,
not
right.
for clients, which is why they make billions every quarter, but their clients are retiring broke
Yeah.
and suffering because paychecks don't come with instructions.
Yeah,
And the employers and the industry,
that's
they
interesting.
just do what favors them and not you and I,
Yeah.
unfortunately.
See, that's why we have you on the show to tell our guests all the things, all the loops and that we can, cover to be able to be financially free. Because I think that everybody wants to be financially free, especially when you retire.
Yeah, it's my pleasure, and I'm able to provide whatever information your panel needs because it's very helpful what you guys have come up with.
Interesting.
So, for the purpose of today's show, you will be helping us to break down this very complex need that most of us, everyone needs to have. Particularly, we want to focus on newcomers and young adults who might have no idea what insurance is, who might not even see the importance of getting one. Because I remember when I came here as a new immigrant, insurance was the last thing that I was thinking about, right? But it should have been probably the very first things that I should have been thinking about. So the hope is just that we break it down. And I would like to start by asking you, well, I should say this. When we had this conversation, we talked about naming it insurance for dummies, but I don't know how appropriate that is. So we would just say we are making it as simple as possible so anyone can get it, right?
Yeah.
So how would you explain the concept of insurance to a new immigrant or a young adult who has no idea what that is?
Well, first of all, that word insurance just means that you are protecting something in case tragedy strikes.
Yeah.
So when it comes particularly to life insurance, there's nothing like life insurance. Unfortunately, the industry has gone on with this name for 200 years and they just sell it without educating people. It's supposed to be called income replacement insurance, not life insurance. Because if I leave your show and I crash on my way home and an insurance company pays my wife money, they haven't replaced
They're
my
not
life.
paying for your
Yeah.
life,
They
right?
replaced my money
Yeah.
because the bills that were coming into the household and my wife and I are running a house, now I'm gone with my income, right?
Right.
But the same bills will keep coming in and she cannot run that house with her own money because we were used to running it, two of us.
Yeah.
So it's income replacement insurance, not life insurance. And the industry has just gone on with that. Life insurance. No.
Do we know why they prefer to use a name that really doesn't apply to what they're covering?
That's a fantastic question. I think they just come up with stuff to make it work for them.
Yeah.
Yes, because if they say income replacement insurance, let's say somebody doesn't have a job,
Yeah.
would think, but has dependents that are counting on him financially, you say, oh, I don't even have income anyway,
So
so
what's
what
the
am I
point?
replacing?
Yeah,
Right?
exactly.
Yes, but when they make it life insurance, then the people think, oh, I'm insuring my life
Right.
in case something happens, but it doesn't work like that.
So you bring up an important point. A lot of the market uses a lot of catchy phrase just to hook their customers, and many people don't read the blueprints
Yes.
and or the fine print, and then you fall into these traps that when you need the money, it's not really what you thought you were gonna get.
The most important thing about life insurance,
Mm-hmm.
I have to go with that word life insurance.
Yeah.
Because that's what everybody understands,
So
right?
the most important thing about life insurance is that it's not for everybody.
Yeah.
But the industry sells even to 0-year-old children.
Mm.
Life insurance is if you have people counting on you financially.
Yeah.
Mm-hmm.
So if you have a wife and kids, mortgage,
They're counting on you. Yes.
you have dependents, so that if something happens, those depending on you financially don't have to go through a financial stress.
Yeah.
Mhm.
But the industry, because they're out to grab cash, they
Yeah.
just sell to everybody. Normally, life insurance shouldn't be sold to like a 24-year-old boy in Calgary or girl who lives in the parents' basement.
Yeah.
Nobody's depending on them financially. They
Yeah.
don't need life insurance.
Yeah. I know we've kind of gone into life insurance already, but the other types of insurance that,
Exactly.
that are out there. Can we speak to the different types of insurance?
There are all kinds of insurance.
Yeah.
Sorry, there is mortgage insurance,
Mhm.
but the bad part of this is that the more words the industry use, the more they confuse the client,
Exactly.
the more they abuse the client.
Yeah.
So when somebody buys a home, they are happy they've bought a roof over their head, and then once they've signed their life on those papers for 25 years to pay off that mortgage, the next question is, oh, they say congratulations. Now that you've bought a roof over your head, don't you think it's a good thing
Yeah.
to buy mortgage life insurance in case something happens to you, your mortgage is paid off?
Yeah.
95% of the population will say yes, but they don't know how mortgage life insurance works because they're just selling to them. They're happy they bought
Yeah.
a house, but they don't know how it works. And the industry will call it sometimes mortgage life insurance, sometimes they call it mortgage protection plan.
Mhm.
But we
Then-
break it down to the consumer to let them know how it works. And I'll give you a quick example here.
Yeah.
Let's say you buy a house for 500,000.
Yeah.
You buy a mortgage life insurance. In your brain, you think that if something happens to you, they're gonna cut a check for that 500,000 to your
Yeah.
wife
Yeah.
and the kid, right? But it doesn't work that way. The lenders, which are the banks, are using the homeowners to protect their money that they used to buy your house. So if you're paying $250 a month on your mortgage life insurance, let's say your amortization period was 25 years,
Yeah.
but you're paying the $250 every month. 10 years go by, now your mortgage, the balance of your mortgage is $250,000.
Yeah.
You're still paying $250 on a mortgage that's decreasing.
Yeah.
If something happens to you, then the balance of your mortgage is what? $250,000.
That's
They
what-
cut a check for
for that amount.
$250,000 to the bank,
Yeah.
not to your wife.
Yeah.
Yes, your mortgage is paid off,
Yeah.
but what is your wife left with?
Yeah. Just a
$0.
house. Yeah.
So not only that, sometimes they do posthumous blood work. Once you pass away,
Mhm.
they come and draw blood.
And
If
they
they
say,
find
"Hey."
anything in you, they say, oh, pre-existing condition, we are not paying.
Yeah.
And what do? They repossess the house. Your family is left devastated.
Are they allowed to do that? Like to posthumously come and collect blood? Is it legal?
It is, unfortunately, because it's an industry that was started by politicians.
Yeah.
Mhm.
Yes. Insurance as a whole started in London, England, came to America. First House of Senate came up with it. And they lobbied a law that still binds and protects them till today. We cannot be investigated until we ask to be investigated.
That's
So if
terrible.
lawmakers keep a law like this,
Yeah.
They
who
don't
are we
intend to.
turn it
yeah.
around?
Yeah. I mean, it's really funny to say you can come to someone's loved one who has passed away and just collect blood without your consent.
Well, because it's worded in that contract in the fine
I
print,
know.
which they didn't
Well,
show
they didn't
you
read.
at the point of sale.
Yeah.
So when they come that time, they will show you in there, and the guy had signed.
Oh boy.
And does not only happen with this mortgage life insurance;
Yeah.
it happens with life insurance too. So anybody who owns life insurance that didn't give blood or urine initially is just flushing money down the drain. Because if you buy a car, when you call to insure a car, what's the first question the insurer asks you? The VIN number, right?
Right.
And the reason for asking the VIN number is to know if that car is insurable, is to know if that car is stolen, is to know whether it's an aftermarket car or the engine has been rebuilt. Once you give the VIN, they run the history, car proof, they call it, of the car before they give you a quote. So when an insurance company comes to insure you and doesn't take blood or urine up front and sells you a life insurance, what is the proof that you are insurable? There's no proof. And they do that knowingly.
Yeah.
Because when you happen to pass away, they don't want to pay. They will come and draw that posthumous blood, find a pre-existing condition, and refuse to pay.
You're doomed.
But a right insurance company will take your blood and urine up front, analyze it.
Yeah.
If you are insurable,
They get you
get
policy,
insurance.
right?
Yeah.
Anything happens down the road, they don't debate, because when they drew blood and urine, it was fine. You insure. You could be a non-smoker even. You buy your life insurance, you start smoking next week, fine, because when they drew your blood, you had not started smoking. And if you die from cancer, they are paying because you were insurable when they took the blood and urine. But the vast majority of the industry is not doing that.
Wow, that's interesting. I know we've just talked about we've talked about life insurance, and then we've talked about the mortgage insurance, right? But my next question, I'd like to break it down a little further, right? So in your opinion, what are the 3 most important insurance policies that someone should have? And for example, let's take a single. So let's take a 24-year-old, right? Are there any policies that they should at least have? We'll talk about the 24-year-old single, and then we'll also talk about the 3 most important policies for couples with kids or families with kids.
Well, for a 24-year-old single, the only kind of insurance I would advise is depending on what the 24-year does. If he's a pilot, if he does a lot of mountain climbing, because that's a risky profession, then they need disability insurance. Because they have a risky job. But as far as any other insurance is concerned, if they have a car, okay, they need a car insurance. But for any other reason, it's just giving money to the industry. Because if he passes away, nobody's counting on him financially, and it's done.
And the disability insurance is just to ensure that if there is an accident
and he's disabled,
then he can
carry on.
Perfect. That makes sense. So what about a couple? Someone like myself with kids.
A couple with kids, 3 types. Well,
we are talking about the most important.
The
we
most
don't want to
important.
talk about every policy that they should
get. Generally speaking, you don't need more than one type of life insurance. But if a couple has a house, they need a homeowner's insurance, not a mortgage life insurance, because you're insuring the mortgage for the lender to benefit at the end, not your family. So they need a homeowner's insurance. They need their car insurance if they have cars, and they need life insurance. And there's a rule of thumb with life insurance. Anybody needs to have a face amount. They call it face amount or face value amount, 8 to 10 times what you earn a year. So if you're earning 40,000 a year, you need 400 to 500,000 of insurance, because when life insurance is sold, they are not selling it for you to die today. Things will happen down the road. They factor in inflation. So if you're earning $100,000 a year, you are looking at $1 million of life insurance coverage. But life insurance is not a permanent need too. The industry has made the people to think it's a permanent need. Life insurance is a temporary need. Why is it temporary? Because when we are young, we have these student loans, young family, a mortgage. We haven't accumulated money yet. So if something happens to the breadwinner, it leaves the dependents with financial devastation. So you need to figure out, if you have a 1-year-old child, you have a brand new house, you're earning 500,000, you're having 40,000 a year, you are looking at 400 to 500,000 of insurance income replacement. You are looking at a 25-year term insurance, because in 25 years, that 1-year-old will be 25, out of university, gone.
That doesn't
the
need
mortgage
anymore,
will be paid.
Yeah.
So if after 25 years you have no dependent, your mortgage is paid off, and you have money sitting in your bank account, why do you need income replacement for?
Exactly.
You are self-insured.
Yes.
But because the human mind doesn't like talking about dying, the industry came up with this smart idea to combine insurance with an investment. And when we walk into grocery stores, you see people are crowded where it says buy one, take two, right?
Yeah.
So the industry used that to prey on the people. We will sell you a policy with an investment attached. You can take money down the road to sponsor your kid at school. It will retire you wealthy, but they use illustration sheets to sell.
Yeah.
And because people are not comfortable talking about dying, they buy into that.
Ignore that.
But
and
the
just
bad
buy
time
into
to
it, right?
find out is when somebody passes away, or if God gives them a long life at the very tail end in their 60s, 70s, that's when they realize that that product that was sold to them doesn't work the way they
Yeah.
thought. But it's too late because they can't get the money and they don't have any insurance coverage. So there are three types
Yeah.
of life insurance out there. The one everyone should get,
get,
everyone that needs life insurance
Yeah.
should get is called term.
Right.
Term simply means temporary because life insurance is not a permanent need. Then there's another type called whole life insurance and universal life insurance. These two are called cash value life insurance because they have an investment attached to.
Yeah.
But they have hidden rules that the sellers don't tell the client.
Right.
Because if they tell you up front, you will never sign.
Yeah.
But they hide it and sell. And unfortunately, that's the most that's being sold out there
Yeah.
because we are dealing with an industry that's 150 years old.
Yeah.
So we basically teach people how to read their contracts.
Yeah.
And if you want me to elaborate more on
Yeah.
what's hidden in these things, let me start with whole life. If I say I will sell you a whole life policy, and there are 4 rules in that policy, and I spell out the 4 rules to you, and the first rule is let's say your monthly premium is $100. If I tell you that for the first 2 to 5 years of you paying $100 for your life insurance premium every month, the first 2 to 5 years you have zero. Because remember, it's a combined product,
Yeah.
life insurance and investment. So if I say in 5 years you've put in money and you have nothing in the investment
return,
program,
right.
would you sign it?
No.
That's
No.
the first rule that's hidden in a whole life insurance policy. But the agents never show the client at the point of sale. Rule number 2, after you've gone through your years of zeros, money now starts accumulating in the investment. But you've lost 500% of investment, right?
Yeah.
Because of that, yeah.
Then money starts accumulating. Then they'll lock you in a very low rate of return. Because in every country, if you make money, you pay taxes.
Yeah.
Because when you buy a whole life or universal life, you've given your rights to the company to run your product.
Yeah.
So they make sure that policy doesn't make money, because if it makes money, they will be paying the tax.
Yeah.
So they lock you in a low rate of return, typically 2 to 4% for life in a whole life policy.
Wow.
Hidden rule number 3A. They told you verbally you could take money out.
Yeah.
But that money that you're taking out is your money. They are loaning it back to you, and
yeah.
it's in
You
the
pay
contract.
interest.
Yeah.
But then they charge interest higher than what you're locked in, typically 8 to 15% interest rate. So if you go to the bank, you put in your debit card, you punch, you want to take 500 out, and a message pops up on the screen. You will take this 500, but when you want to put it back in your account, it'll be 750. Wouldn't you want to talk to the bank manager?
Probably, yes.
But because people are not comfortable talking about dying, they're just giving into these life
Yeah.
insurance products because they
Yeah.
only hear you take money out and this and that. Then rule number 3B in a whole life insurance, now they've given you that loan, it's your own money. They charge you higher interest. And then they decide what to pay, because there are words in these policies that clients don't know. If you see a word like initially,
Yeah.
that's a bad word to be in a contract. If you see a word like if, that's a bad word. People read and don't
It's very
understand.
conditional, right?
So yeah, let's say somebody had insurance for 50,000, and then he saved 25,000 to age 65, or whatever age he dies. That's 75,000, right? Shouldn't the widow be expecting a check for 75,000?
Yeah.
But because that word initially was in that contract, the company has dropped the face amount to any amount. It could be from 50,000 to 25. Now they are paying only 25,000 to the widow. They don't even mention anything about that 25,000 that was in savings, and that's how they steal it.
Yeah.
And it's in the contract. But they will never show you when they're selling, because they show you upfront, nobody signs.
Yeah.
Then
But,
when some companies were teaching people how to read these contracts.
Yeah.
So it's easy to spot 5 zeros on a contract, right? Then the industry in 1980 came up with a smart idea. People are getting, by the way, in 1950, life insurance sales plummeted because people started realizing, why am I buying something that is paying out when I'm dead?
Yeah.
Because the industry sells without educating. If they told the buyers that what you're buying is not for you, but you are
It's for you.
dependent,
Exactly.
people understand and know they are protecting their income and their dependents. So in the 50s, life insurance sales plummeted. The industry said people are starting to get smart, so let's
need to
create investment and life insurance combined.
together,
That's how
right?
they created these two. But they started with whole life. Then when people started finding out these zeros, because if you mark 5 zeros, anybody flips the page, they can see 5 zeros.
Yeah.
They came up with another idea, okay, let's create universal life in 1980. Let's create universal life. We don't put the zeros,
Numbers, right?
but it's still investment and life insurance combined.
Yeah.
But we write the zeros in another way, which I always use a famous French saying when I'm describing this. You know, the French, they always say tout le moyen sont bon. That's what the industry did. These 4 hidden rules that I just showed you and talk to you about in a whole life insurance, with universal life, they changed it to 2 words. And those 2 words are surrender charges. What does that mean? Okay, you putting money now, that same $100 in a universal life insurance. After 12 months, that's $1,200, that's in. 24 months, you've got $2,400 in. You get your statement, it's showing that you have $1,300 in your investment, not zeros as in a whole life policy.
Yeah.
Okay, since it's your money and it's an investment, if you want to take it out, underneath your policy, there's a surrender charge printed in fine print. If you want that $1,300, you have a surrender charge of $9,000. What does that mean? Who in the right mind would get a check for $9,000 to an
get
institution to
1,000?
take $1,000?
Yeah.
And
Nobody. That's
means
how your
that
money
you have
stays.
nothing, right?
Yeah.
That's another way of writing zeros, but just in a different format.
Oh, ridiculous.
Jesus, this is complicated. This
It's a
is-
very straightforward industry, but the industry has really twisted it to
Yeah.
prey on people.
Yeah.
Wow.
This is really scary to hear.
It is. People who bought Universal Life in the 80s are retiring now,
Right.
and they are finding out that they have nothing. Because not only does it have these hidden rules,
Yeah.
it has something in it, Universal Life. If you see a Universal Life policy that says YRT or ART, they are the same words, but they just play with words to
Right.
abuse. YRT means yearly renewable term. ART, annual renewable term, but that's the same thing,
Yeah.
right? So when the client is seeing that term, they're thinking they have term insurance.
Yeah.
But that YRT just means that your premium will be going up every year. But you will see the same $100 leaving your account, which they told you verbally your premium will never increase. Okay? But because of that YRT, the cost of insurance is going up every. So when it goes and surpasses that $100 they're taking out of your account, what do? They start draining the investment to top up.
Oh, boy.
So if you are paying 100 today, 2 years down the road, your cost of insurance is 125. They take the 100 from your account, they just go from your
investment.
bank account, they go to the investment, they
pull.
claw back 25 to top up. And they keep doing that. As the years go by, cost of insurance going up, they keep clawing back. Once that investment is drained,
That's
now
your money,
cost of
that's gone,
insurance
yeah.
is 300. They can
They
only
are
take
that-
100 from your account. What happens then?
They come.
They mail you a letter. It has come to our notice that the above mentioned universal life policy is currently being underfunded. So you need to call and book an appointment to revise your premium.
Which
That's where
means-
it implodes because people are pissed at that time.
It's like,
So I have to
I
pay
give
300
up.
now. I can, and they cancel.
They give
When they
up.
cancel, who wins the game?
They win
They
because
win.
you've been putting money and they've
Yes.
been using
now
it,
you have
and
no
now you have
insurance,
nothing.
no investment.
This is really it's a very complex concept, right? And so what do you say to someone who looks at the whole situation and says this thing is very complex, I don't understand it, and as a result they are reluctant in even looking into it, right?
Yes.
As an agent, what do you tell someone like that?
We see a lot in the field because people are trying to do the right thing.
Yeah.
Hardworking people, but they are being abused by the industry. But it's very simple. People should just think why don't I have an investment attached to my car insurance? Why don't I have an investment attached to my homeowner's insurance? The answer is because it doesn't work. The only reason that the industry attached investment to life insurance because people are not free talking about dying. They don't consider death like part of life. So that's why they used it to prey on them. So you need to put your insurance here, your investment here. Never touch the two
So they
together.
have to be like two separate
By
things
term,
to do with.
pure term, invest the difference in a TFSA and RSP. Now that we're coming to mentioning investment product, please, if you don't mind, let me touch something on RSP before I forget, because that's another thing they're abusing people. So a hardworking Canadian goes to open an RSP account. The industry sells that RSP in a life insurance. RSP is registered retirement savings plan. By the way, which a lot of people avoid it, and because they don't know how it works, and because the industry doesn't educate. People will say, why would I put my money when I want to take it out? It's taxed. But it's a very good product that if you use it well, you'll be laughing at retirement. There are two things that are guaranteed in life. We shall one day die, we shall one day retire.
Exactly.
And every Canadian has an 18% contribution room in an RSP. So that simply means if you're earning $100,000 a year, you can contribute up to $18,000 in your registered retirement savings plan. The first short-term advantage is that once you do that, next year when you're doing your taxes, it reduces your taxable income. Canada Revenue will only tax you as if you earned $82,000. If you earn that same $100,000, didn't have an RSP, you'll be taxed on the full $100,000. But what people don't know is that when you are contributing into an RSP, you are not being taxed because you are still working and the money is growing. When you retire now, and you are at a high tax bracket when you're working, but you are not being taxed when you're contributing. When you retire now, are you in any tax bracket? No. You are not working anymore. So, but that money grew upon time with no tax. Now you are withdrawing. They just figure out a withdrawal amount based on how much you earn and how much you've accumulated. So if you're withdrawing, if you had invested $500,000 and it grew to $1 million, let's say, and then you have to pull out $5,000 every month to live off of it during retirement, and you're paying $200 a month. Is that a loss?
No.
But people don't know because the industry doesn't teach them. And a lot of people who don't have these RSP accounts are giving money away every paycheck to the government. Yes.
So again, this would probably be an important, we call it policy. For someone to take, right? In addition to
we don't call investment policy. Anything that policy
investments,
comes in.
Sorry.
Yes, they are trying to sell you.
Sorry, investment.
Investment.
Wrong term, right?
So, but the right thing to do if somebody is at a low tax bracket, say earning $40,000 and less a year, it's not advisable opening an RSP because you're already paying very little tax. But if you are $50,000 and up, you're already at a high tax bracket. You need an RSP to reduce your taxable income. And the government is smart. There are only two ways to reduce your taxable income. Have an RSP or have a business that you write off
expenses,
right? Yes.
Perfect. So, another question. As a new immigrant, how do you explain because again, they would say, I could say, for example, that, hey, I know.
I don't know if this is only for new immigrants. You have people who are born in this country who are struggling with the same things, right?
Oh, no, you're right. Again, yes, that's
for everybody.
It's for everybody.
Not only
it's for everyone,
one kind of people.
It's for everyone.
As we speak, there are 11 million cash value life insurance in Canada alone. 11 million. And as we're speaking here, there are thousands of agents selling that very product now as we speak.
Right.
Yes. So it's not about me, immigrants.
Everyone is in the same pot.
Everyone is in the same pot,
and the government, you know what the government does? They say, do your due diligence. Buyer beware as a capitalist society, because the government cannot shut down this company. If they shut them down, then they have millions or hundreds of thousands of employees with no job, and they have to collect EI. So they just say, okay, buyers beware. Do your research before buying anything.
I'm sitting here and I'm feeling so scared with this information you're giving me. It's really terrible how deceptive the company has been over the years. How did we get to this stage?
Well, it got to this stage because the countries are being ruled by politicians.
Yeah.
And the politicians
Need this-
started this industry.
Right.
Yes. And they still have that law that binds, covers them not to be investigated until they ask to
ask.
be investigated. It's just like we have a few cases here. A cop will shoot somebody and then they send another colleague to
to go
investigate
investigate.
it,
How
yeah.
do you?
Yeah.
Yeah.
And then I'm also thinking, like, what happened in a free market? You would think it's an opportunity for guys like you to be able to flourish in terms of educating the population on all these loopholes that they are using to be very deceptive to the population. But people like you are not very popular. Like, is there a conscientious effort to like kill the people who are trying to teach people?
If you're trying to beat the system, if you're trying to improve the system or
Yeah.
beat the system, I'm sure
There seems to be a concerted
the
effort to be
challenges-
like
Well,
to
I'll speak for myself personally.
yeah.
First of all, most people buy these products from a family member,
yeah.
from a church member, or
Or people they know.
Or, yeah,
You don't
people they
question
know.
a lot.
Then when you if I come in now, I'm trying to teach them the right thing. They're skeptical because they bought it from a
From a-
brother-in-law or an uncle, right?
Yeah.
So unfortunately, some people see it and get it.
Yeah.
Some will
Don't.
wait until when they get that letter that they have nothing, then they start calling me. I've had lots of people like that. Another thing is there's a mentality problem out there. Some people think, oh, if this man helps me get this, maybe he's gonna make 1 million. He wants to use me to make money.
Yeah.
So you can only help people who want to be, who
Yeah,
are willing to be helped.
helped,
You
right.
cannot force people to do what is their money, right? They have the right to flush it down the drain
If they
or
want
to make it work for them.
Yeah. I think for me, what I have gathered from just this from the question is that you need to first of all find honest and knowledgeable brokers and agents who have the right information, and also you need to carry out due diligence just to make sure that the information you're getting is what it is, and also watch out for schemes.
Yes.
I get a feeling that is something that we should kind of mention.
Exactly. First of all, people shouldn't buy contracts online.
Yeah.
That's one, yeah.
Yes, because when you are talking to somebody over a screen, you're seeing that person. If he's doing a presentation, he can hide some scripts.
Yeah.
And there's always a time frame for a video conference call. Meanwhile, if that person is sitting in front of you, kneecap to kneecap, you can even pull a piece of paper
So
that
what-
is shoving
yeah.
underneath and
So
see
what's-
something.
Yeah.
Secondly, it's a no. Don't buy life insurance if they didn't take blood and urine. That's yes. So if you have words like initially, if, may, those are bad words in a contract.
Yeah. What of people who are already been stuck in this insurance and like this information is very helpful? How do I get out?
Well, there are ways to get out. If you are if the person is disciplined, we help him or her get out. But some people use emotions a lot.
Yeah.
If I analyze an insurance, I'll give an example. I analyzed one insurance policy. This guy had dumped in 14,000 in it.
Yeah.
So I told him, hey, you have to be patient for 3 weeks for the right one to come in before you get rid of this, because you've already paid in a lot of money. Now you're upset. 460 this month will not kill you when you've already dumped in 460 for a long time.
Yeah.
But when I left, he called and canceled. When you cancel like that, the company is even laughing because you lose everything.
Yeah.
We have a format that if it's a whole life and the client has gone through his, and one thing to mention before I finish that, they sell depending on how much you make. So if they come and they ask
That's
you
what
what,
they should ask you, how much you make.
yes, because the more you pay for a life insurance policy, the more the agent is paid. So when they ask how much you earn a year, or they say how comfortable are you, how much can you spend a month for a life insurance, you say $500
Oh, yeah.
because they've put in your brain that it's investment and life insurance.
They're cutting you a
They
policy
just go
for
on
that.
their
Yeah,
laptop
find
and
something
they
that
find
matches.
something that matches that,
Oh, yeah,
because they'll be paid 500 a month times 12 months is what? That's 6,000. 110% of 6,000 is what? 7,000 to 7,500, 8,000.
Yeah.
That's why they're getting paid. That's why the client is having 5 years of zeros in the policy, because
that
the agent was paid with your money. So when you're paying your premium, the company is recuperating what they paid the agent. Until they recuperate all, before money starts accumulating there.
Boy.
in the
This is so scary. I don't know how you.
So there are two ways to cancel. When we find a fine one,
Yeah.
a good one, we tell the client, keep
This is
it.
good, right?
Yes. If it's a bad one, we show in the policy what's bad.
wrong with it?
You have the right to doubt, but to confirm what we say or we teach, you call the company, never the agent who sold it. Because if you call the agent,
They would-
he will lie to protect a chargeback.
Yeah.
Let's say he sells you something, gets paid 8,000. The company has only recuperated 6,000 from you. You're still owing 2,000, right? If you cancel now, the company sends him a letter. Okay, policy number this has been canceled. But of the 8,000 we paid you, we've only recuperated 6. So you have a charge back for 2,000. So when the clients call the agent, they lie to wind time so that this money all is collected so that they don't get a charge back. But to get the honest truth, you call the company. They will tell you the truth now then because they know you had already signed. So if you want to go out, the rules tie you, right? You have to honor every rule. So we help clients do what's right.
Yeah.
Keep it. Make sure a good policy comes in before you cancel for 2 reasons.
Yeah.
Sometimes somebody can use emotions and cancel, and then the nurses come and take blood and it's uninsurable. Meanwhile, he's canceled the other one, even though it was a bad one.
Yeah.
Because even though they are bad,
It's better than nothing.
it's better than nothing.
Yeah.
The second thing is somebody can cancel and then the agent and then dies the next day. Then the agent who sold it will come and say to the wife, you see, I sold you this person came and deceived you.
Yeah.
You cancel. There's your dead husband, no money.
Yeah.
So
Don't
doing what's
cancel
right, never cancel
until
a
you
bad
get a
policy
policy
until you
that's
get a good
covered.
one in place.
Wow, interesting.
That's
Are there some
that's
people
nice.
that are uninsurable?
Yes, lots.
Lots of people.
That's why they take blood and urine, right?
Right.
When they find signs of these terminal diseases, very chronic diseases, they don't, because who does business to lose? Even though there are some good companies out there that pay the claims, their intention initially is not to pay a claim, but they pay it.
Yeah.
So they always make sure they look for the person that's insurable so that you pay a premium for. They know you're going to die sometime. But you pay at least for a bit
before you,
because the claims are being paid by those who are dying.
Yeah.
Yes, those who are alive are paying those who are dying. Sorry.
Yeah.
Yes. So it's just like
It's
that.
just all the risk pooling and then risk assessment.
Yes.
Yeah.
And then there are some other group of people with very high premiums. Smokers pay
a lot
way
more
lot.
money, right?
Yeah.
Pilots, any risky job, you have a high cost of insurance because of the
There's
job.
a likelihood that you might not leave
Exactly.
because of the nature of the job or the lifestyle,
But
right?
there are some companies out there too that would not just reject certain people because it's not your fault that you have such as but they rate you.
Yeah.
Which means your premium, if it was to be 100, it can go up to 175. If you can pay, you are insured. If not, then
That's it.
you're left alone.
So what happens to people who are not insurable?
Well, people who are not insurable have to invest.
Yeah.
And not investing at the bank, because if you invest at the bank, you are guaranteed to retire broke or to need your money when you need it, and it's just the exact amount that you put in because it didn't grow. Again, the human mind likes the word guarantee.
Yeah.
But investing is time in the market.
Right.
When they go to the bank, instead of the bank educating the layman starting from the counter, they say, what's your risk tolerance? You want high, low, or medium risk? Because people are afraid to lose their money, they say low. When they say low, the bank is happy. They put you at a 0.5% rate of return. The money you are putting in the bank, they turn around and give it back to you in a credit card for 19.9. So right on your money, the bank is making 18% of you, but giving you 0.5 on your investment. Which is why you see people work in this country for 40 years, retire broke because they saved at the bank. But we teach people to own shares of the bank instead of saving at the bank. If you own shares of the bank, if you walk into a bank and say, I want to own shares, there's no way. They're not giving you. But we have ways to make people own the shares. If they make money, which they do every month,
you
partake in dividend, income distribution, capital gain. Yes. So that GIC that they use and people think, oh, my money is guaranteed, actually means guaranteed insufficient cash. But the bank uses guaranteed investment certificate. Yes, because if you put money and it doesn't grow,
What's the point?
It's
Well,
guaranteed you get your
you
money
get your
back,
money
right?
back.
But it's insufficient. So
Yes.
why not just put in your shoe and put under your bed?
Yeah.
And leave. Rats will eat it. No, I'm just kidding. I'm just kidding. Talking about people who are uninsurable, is there kind of a relationship between the insurance, the system here, and say a system back home in my village where people join meetings and they have trouble funds and they have this little ways of doing money? There's no life insurance, there's no any of that.
Yeah.
But is there a relationship between what is happening here and then what is happening back home in my village with those little things? Do you see a connection?
I'm
Does it
glad
make
you
sense?
brought up that point, because there are certain things that work there that cannot work here.
Exactly, yeah.
First of all, if you set up a life insurance company in
Nobody
back
is
home,
looking.
who is buying?
Yeah.
When somebody dies, neighbors come out to dig a grave.
Yeah.
Here, you buy a plot.
Yeah.
You pay for it to
Exactly,
be dug.
yeah.
You buy a coffin. Back there, carpenters will clean a coffin. And it's
Yeah.
a community thing,
Yeah.
right? That question is very good, because I was going to mention even though life insurance is not for everybody, I think every immigrant, whether you have dependents or not,
should.
you need life insurance, because we are the best clients to MoneyGram, Rare, and all these money transaction companies. So if you are sending money back home to family, those are your dependents.
So they need
Even though you don't
right?
have a kid here yet, if something happens, those people are financially devastated. So you need it. But a Canadian boy,
With-
white guy, Calgarian, living in the Dutch basement, 24 years old, no wife, no kid, doesn't need it. But I think every immigrant does. So back to your question, when they do those njangis back home, it helps, because first of all, the widow will be guarded for 7 days. They're bringing food. Where do you get that here? They
No.
do a GoFundMe.
Yeah.
Those things don't help, because that GoFundMe might raise 25, 30,000.
30%.
They carry, just to carry that dead body back home is that amount. Then what does the widow do when she comes back with the kids? They're
Nothing.
financially devastated.
Right.
So it's always good to put that income replacement in place in case something happens. You take care of the bills that were being paid prior to the breadwinner going. Yeah.
That's interesting. Yeah, we do it, but we do it in a very different,
In a very different
very
way.
different community.
I mean, it
Said
speaks
that.
to the difference in societies. We have a very communal conformity kind of society back in most parts of the world. It's mostly in Europe and North America where they have an individualistic kind of lifestyle. So insurance picked up on that and then exploited the market. You know,
Exactly.
yeah, it's really terrible.
Also wanted to ask your opinion. I know that sometimes we bring parents here who may not really qualify for any kind of insurance, or sometimes we ourselves may be uninsurable, right? And if we are looking at situations where we don't want to put our dependents in a position where they need to spend money when we die, I'm looking at group. Now, would it be group insurance policy? So, for example, I'm looking at Retu
RPN.
Natal,
RPN.
right?
Yeah.
What role do you think something like that plays? How important is it?
This question actually answers one question you asked earlier. What do people who are uninsurable do?
This
That's
is one thing that they can use,
pay
right?
Natal. They don't take blood, but then it's 15,000
Yeah.
they pay out. At least it helps to take the dead
The
body
corpse
back,
back
home.
home.
Yes.
Yeah.
So for our parents, some companies will sell life insurance even to an
To
80-year-old.
visitor, okay, visiting.
Yes, but they will not take the blood because they don't intend to pay. So that's not a good path to follow.
Oh.
So some will sell to a parent who is less than 65 years old. And they wouldn't be selling a 30-year term or 25 because they know he's closer to the grave. They can sell a 15-year-old. What I advise if a parent is visiting, that you buy travel insurance. But when you buy the travel insurance, you'll be paying stuff before submitting claims, medication, medical tests. Never let that insurance policy expire before you renew. So if he's here for 6 months and you buy 6 months coverage, if you extend the stay for another 6 months, make sure you
get
extend the travel insurance too, because if it expires, then you renew it or you buy another policy, and then your parent falls ill the next day, you take him to the hospital, no company is paying your claims because you have a waiting period now to requalify. You have to wait, some will say at least 72 hours. So if you buy a policy after you let the other one expire and you buy a new one, you have to wait for 72 hours before you can take your parent to the hospital. If you do anything prior to those 72 hours,
it's on you.
Yeah, they will just send you a letter. You didn't respect the qualification period. Sorry, we are not paying.
I feel like we've touched
on so many things. Is there any other financial advice? I mean, you've talked so much on so many things that it's hard to digest. Is there another thing that you think we're missing that's important for our guests to know?
Yeah, well, some people in this busy life we live here, some people might not even be able to sit and watch this entire show. But when it comes to money, it's very simple. Right? Make your money work hard for you instead of you working hard for your money. Right. So invest, not saving. Because banks, they save money, they don't invest.
Yeah.
And then when it comes to life insurance, never combine the two together. Never combine life insurance and investments together. Separate them. Because if you separate, you're paying for two things. Something happens, your beneficiary is getting both.
Yeah.
If you buy 1 + 1 with the whole life insurance is 1. Because remember those 4 hidden rules? You're paying. At the end of the day, if you pass away, they only pay the first amount, which is being reduced because of that word initially. They keep the savings. In the universal life, 1 + 1 is 0 because when the cost of insurance, because of that ART, when cost of insurance surpasses what they're taking out of your account and they drain the investment, now you have no investment, no insurance, which is why 1 + 1 in a UL, universal life is 0. Unfortunately, like I say, do you believe churches sell life insurance?
I've never heard that.
Church sells life insurance, and it's called Knights of Columbus.
Oh, yeah.
Yes, and it's whole life and universal life. Ruining their own Christians who are giving them money every Sunday.
It's really
offerings.
sad. It's really sad that the church allowed that.
So do you think I can easily convince a guy who's been a born Catholic for 40 years, who bought life insurance from his church?
They will not believe you.
They will not believe. Until the day they receive that letter. Or until the day he passes away. And then the spouse finds out, wow, I was expecting 300,000. I'm only getting 50. Sad. Wow. That is a sad reality.
It's really sad. Wow. It speaks to the kind of, because most people buy this thing out of trust. Either they're trusting their church, they're trusting a loved one, they're trusting somebody that they respect. Then to come and feel like you've been deceived for a long time, it's very distressing.
Yeah, people are strange. When you're driving on J-Foot, you see a sign, there's a camera, right? You still see people speeding by and getting flashed. Yeah. It's the same thing with this industry. You will showing somebody 5 years of zeros on his policy, but he's telling you, but it's long term. Yeah, that's good. He told me it's long term because he bought from a friend or a church member. What can you do?
It's difficult. Again, I kind of understand when you trust someone and when you have a personal relationship with someone, you feel like they will not give you anything that would ruin you, right? Exactly. But again, that is not always the case.
The sad part is that the people that see it, because if you put in mind that the person you trusted, if something were to happen, that person will not step in and take financial control in your house. That might help because right there, then you call that company, say, yes, but if I die today, my friend is not coming to pay my bills, take care of my kids. So why don't I phone this company and find out what this other guy is telling me is true or not? But you have some people whose minds are blocked. Whatever they were told is what they're sticking with till the day they find out that they've flushed thousands in the drain, and it's too late, unfortunately.
Wow, this was interesting.
This is really interesting. I'm feeling more scared than I started.
I'm feeling reassured though. Feeling reassured that not everyone out there is perpetrating the dishonesty. That is how I'm feeling now, right? Just talking to you.
That's why I said you guys are outnumbered, and there seems to be it's a very strong effort to kind of silence voices like this that are educating the population.
Unfortunately or fortunately, we don't advertise.
Yeah.
Right? And the simple reason we don't advertise because any company that runs commercials tend to charge you a lot.
Yeah.
Because
When you see those
spending-
TV commercials and radio commercials, who's paying for?
It
Yeah,
is
yeah,
the
yeah.
clients
Consumers
are
premium.
paying. Yeah.
So they charge a lot to take some of the money to pay for the commercials. Our company, we are the
You're
TV
the you're the
commercial. We
advert.
go out and educate people.
Right.
Some people say, but if your company is so good, why don't you guys advertise? Because if we
It's that
advertise, we're
good.
going to charge you too
Yeah,
much.
exactly.
Yes.
Yeah. Wow. Okay.
How are you feeling?
I'm,
You
I'm,
feel
I
looking
tell
very-
you, I'm not
So
feeling good. I feel
anything
my
that you
gut.
own,
Yeah.
that you buy or you bought from a company that runs commercials, 100%. Just know you're
Charges
paying
in
too
it,
yeah,
much.
yeah.
Because you're the one paying for the TV commercial, not
Yeah.
that company.
Yeah.
So we just teach people, hey, if you have this and paying this, you could go with this and pay less
Less,
because
yeah.
they don't run commercials. That's it. If we cannot save money for someone, we don't deserve their business.
Yeah.
And earning money is good, but how you earn your money
Right.
also matters.
Yeah.
I can sell crack cocaine on the street
And
to
earn
kids
money, yeah.
and make money, but is that ethical?
It's not.
But that's what the industry is doing. They don't
Yeah.
care. Their kids go to McGill, they drive BMWs. One guy actually asked me one day, Ebenezer, if you're talking all this money that people make doing this, you're driving a 20-year-old Mercedes. So I would rather drive a 20-year-old Mercedes and knowing that my 500 is going to be 10,000 because it's invested rather than drive a BMW
Yeah.
and then my 100 in the bank earns me 4
Zero.
cents after
Yeah.
1 year. But it's again the mentality problem.
right.
So,
Okay.
Wow. This was a very interesting conversation. I have a very funny feeling in my tummy. Anyways, we're very happy that you came. You put some very educative material out there. We hope our guests can listen and take heed to your advice and follow suit and make certain changes.
Yeah, and like I say, and I always say to people, I don't mind analyzing somebody's contract for free.
Yeah.
If I analyze and I show you it's bad, you decide to keep it.
Right.
I don't care
Yeah.
because that's your money.
Yeah.
I've done my.
Yeah.
You've done your part.
I sleep well. I honestly don't know how these guys who sell these cash value products sleep at night.
Yeah.
Because we are seeing families that don't have. I've gone to appointment and see a family that don't have a dining table,
Yeah.
but they are putting 200 and something into a universal life policy. But they go to a thrift store that a couple with 4 kids, their dining table is like 3 times this table.
Yeah.
But they're working hard, and a guy comes and abuses them with a financial
Yeah.
product. And I don't know how they sleep at night.
Yeah.
But again, like I say, if they bought it from their church pastor, who am I?
How
to
do
come
you
and
get them
convince
out of it, right?
Yes,
Yeah,
so
it's very important.
all you can do is all you can do, and all you can do is enough.
Just do your
That's all,
best.
yes.
Well, on that note, I think you're doing your best, and we're here to, tell our audience to at least investigate what you have. Ask somebody to come and look at your policy and analyze it. Just have a third party,
Yes.
check your policy.
And when, like I said, once it's analyzed, you have the right to doubt
Yeah.
the analysis. But call the company. I sit there. You authorize me to ask the question. I have the phone on speaker.
Yeah.
You will hear the truth, and the truth always comes from us
Yeah.
because when they sold it, they didn't show all what we
Yeah.
just
Yeah.
educated you on, and the company will be telling you then. But can you believe that you ask a company something and the guy at the other end says, but you didn't ask for? How do you expect a layman to know
To understand
questions
enough to ask?
to ask a question in your industry? And that's how they get away with it.
Yeah.
They win cases in court. They have lots of lawsuits,
yeah.
but they end up winning because they've taken your money. You cannot pay a lawyer.
Yeah.
They pay good lawyers to
Yeah.
come and defend them.
Yeah.
Then another thing, once they get sued a lot, they change the company name. This is how they play
Yeah.
their game. When they change the company, let's say you own a product that's called River. They sue River too many times. They settle lawsuits. Then they change their name now to Stream. Then they'll
Same.
mail you a letter say, from this day we've been bought over by Stream.
Yeah.
Your contract remains the same, but the letterhead
Yeah.
will
It will
be
be different.
Stream
Yeah.
because Stream was bought. But it's the same
It's the
company.
same
They just
company.
made a change of
Yeah.
name.
Yeah.
Yeah.
Oh, but you see. For the final 30 seconds, can you speak to work insurance?
Work
that
insurance
people
is
get from
group
work.
insurance, right?
Yeah.
That's a product that's good, but it has its downside too. First of all, when it's group insurance, we don't need blood work. Why? Because the employer or the insurer just takes risk. Not everybody in that group will have a cancer. So they just, and that's why the premiums are low. That's why they only pay 1 to 2 times your annual salary. So if you're earning 100,000 at your job and you have group coverage, if something happens, very few companies will even pay twice the annual salary. The majority pays 1 year's salary. The bad side of that is that you still need to have your insurance that you're paying out of your pocket. Because if you're fired at that job or the company shuts down, that coverage terminates. But there are some companies that will allow you 30 days from the day you quit that job to transfer your policy to your independent agent. But that comes with its own cost, because when you started that job, maybe you were 25 years old. You've worked there for 10 years. Now the job is over. Now you are 35 years old. Then the new guy now will recalculate your premium to match your current age, and that's where it goes too high, and many people don't get it. So group insurance is good, but always have your own private. So if you switch jobs, switch countries, you're paying out of your pocket anyway. It stays there.
Well, thank you so much, Castro. That was really fun, scary, educative, entertaining, but it was very informative. I can assure you that. Much. And thank you for coming. For our viewers out there, we're going to have his information. If you want to contact him, you can contact him and, have a conversation. And please subscribe and share our YouTube channel. That's where you get all our videos, and you get information on any of our guests if you want to get in contact with them. This is the Idle Pack Talk Show, and we were joined by
Ebenezer Castro.
Thank you very much.
Thank you.